break down exactly what's happening and really the fact that this is perfectly normal actually, and I need you to really accept that right now. I need you to accept this, because there's so many people that just sort of think that the stock market is a one-way street. They think that making money consistently is just something that's just going to happen all the time. There will be no pattern interrupts to making money, and that's one of the reasons why I get a little worried when the market does as well as it did earlier this year, because sometimes we don't know that the wake-up call is right around the corner. And so ultimately, this is one of those things where we knew it was going to happen. And the thing is, here's the thing, right? A lot of us, those who kind of learn about this, they then learn like buy the dip, stuff like that, and they say, oh yeah, I'll just buy the dip, buy the dip, buy the dip. Well, you kind of get tested in that theory. It's almost like it reminds me of like getting married. Like there are people who are like, "Oh, if I find the right person, I'm gonna love them forever, and they just got to treat me well, and then I'll be a great wife or great husband." And then they meet the right person, and then you kind of get tested, right? Maybe you get in a relationship where you're bored, or maybe they're really nice to you, and then you learn in the hard way that um that you don't like nice people, right? You actually need somebody to be mean to you to get you to focus. And so you have to do some self-reflection. So it's easy to say I buy the dip. But what is interesting about buying the dip is that sometimes you don't know how deep the dip is going to go, right? Sometimes you don't know how much you're going to get battle tested. Sometimes you don't know how far how much you have to remain committed to buying the dip. And that's the issue that sort of pops up sometimes is like people say, "Oh, I'll just buy the dip and I'll make money next Tuesday." It's like, no, you might not make money till next year, right? You may not make money for another 3 years, right? And that's the real test, right? This is people like me, I don't enjoy this, right? I do not enjoy watching anybody lose money at all. That's not fun for me. I mean, my assets were affected too. But this is kind of interesting for people like me because this is where you separate real investors from people that just, really enjoy making money but don't understand the sacrifice that's required. That don't really commit themselves to having the mindset of a wealth builder. The mindset of a wealth builder means, if you bout it. If this is your life you chose, then this is the life you chose, and that means you're choosing it for richer for poorer, in sickness and in health, till death do you part. So effectively, these are the times where things change. I would not call these times unconditionally dark. Every single market, every single situation is a bull market somewhere. There's always a bull market somewhere. The market does not behave in a uniform fashion. So what's happened right now is you have partly a sector rotation. A sector rotation is where everything's hip and cool over here, and then suddenly they rotate and everything's suddenly hip and cool over there. Every stock didn't get killed. Every stock didn't get buried. Now, I'm going to ask y'all a simple question for those of you that have been hanging out with us, because we talk about wealth and investing every single day. We do financial fitness every day, just like you go to the gym every day if you want to get in shape. Well, we go to the financial gym every day because I want your money to be in shape. So, those of you that have been coming in on a regular basis, I want to ask you a question. Give me a yes or no in the chat. How many of you have heard me repeatedly warn you over and over and over and over again that winter was coming? How many of you have heard me say this over and over and over again? I say it all the time. And the more money you were making, the more I kept saying it. I kept saying it over and over and over and over and over again. Winter's coming. Just be ready. It's going to get bad. This is going to come to an end. It's going to get ugly. Get ready, get ready, get ready. I've been saying that, saying that, saying that. And what happens is that when the market's going up, 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 and interest rates are going down and the Fed is easing monetary policy and everything looks wonderful and the skies are clear, people don't listen to that. They just don't. They think that you're being old fashioned or you're just being you're just being an old man, you boomer. You're old. You just want everybody sitting there around not making no money, Dr. Boyce. You just out of touch. Man, shut up. Shut up, dude. You There's a little boy on the internet trying to argue with me about stocks. I said, man, I have forgotten more about investing than you'll ever learn in your life. Like I knew more at 24 than you'll ever probably know about this. And you're not even at 30 yet. So you ain't seen nothing. You've only seen bull markets. You can't even reference anything before 2016. And that's not That is not an accurate reflection of how this market works. I've looked at 120 years of stock market data. The 120 years, all the way back to the 19th century. So there's a perspective that comes into play. So what has been happening, like, so for example, let me give you an example. Sometimes people will say, "Oh my God, I had to pay 8% interest on my house. That's an unbelievably high interest rate." It's like, well, you do know that when my daddy bought his first house in 1983, their interest rate was like 15%. Like it was high. It was so 8% actually was considered super low at one point. It's only seen as super high because you live in an era of super low interest rates. So the point is, and this is just consciousness. This is supposed to be wisdom. This is what we're supposed to gain as we get older. And so basically, this is something that if you look throughout history and you look at the data going back, 100 years, you'll see this kind of thing happens all the time. The market has these moves all the time. And so you can learn from history in terms of what to expect going forward. And what I'll do is I'll give you kind of like three quick reasons why the market's crashing. Then we're going to talk about solutions because we are solution oriented. And also toward the end of the conversation, I'll make sure I give you some stocks that you may want to take a look at that can help ease some of the discomfort that is surely around the corner. And so before I forget, I want to remind you all in the Black Business School, we're doing B1 Stock Options Weekend. It's being taught by my main man, Errol Seamangal, who's a really smart guy, and a lot of you know Errol. And I'm gonna put the link in the chat. And so, on all the materials are yours for life. You can record everything and keep it for life. And so, here is the link if you guys want to join. And there's a discount code already embedded in the link. So those who are in the Zoom, you're getting the link right now. So feel free to join us. We meet Saturday morning, or I think he's going to start Saturday around 11 or 12 or something like that. It's all in the information's all there. So if you like stock options and you want to maybe trade under your LLC or use options to replace your income and quit your job the way Errol did, Errol's a great guy to talk to. So I'm putting the link in the chat. So feel free to go take a look at that. All right, now a couple things that are happening right now. Number one, AI. AI has been a big topic of conversation for all investors for a very long time. Why? Well, because AI has driven the entire economy for a while. AI spending from mostly hyperscalers, that's what they call these companies that are spending ungodly amounts of money developing infrastructure for artificial intelligence. They are driving much of the economic activity occurring in America. Now, what has happened is that because AI has really exploded in popularity and AI has become just the cool, exciting trend word of, for this year, you have now a bifurcation, if you or a fork in the road in terms of the gangsters and the wanksters, to use 50 Cent's terminology. You have the true investors in the infrastructure and those that are a little more flimsy. You have the real and the fake. You have the substance and the flash. So what has happened with the hyperscalers, and this is really part of the conversation about whether or not AI is in a bubble, is that you have hyperscalers that are making massive investments and they can afford to do it. Right? It's like looking at people that have money. You have people that have real money, real wealth, versus people that are pretending like they're faking it till they make it, right? And you can't tell the difference between the two. It's kind of like that now. So you have the solid hyperscalers, solid earnings growth, solid cash flow. They can literally write $20 billion checks right out of their bank account. These are companies like Microsoft, Amazon, Google, maybe Meta to some extent. Those are the real ones. Those they're solid. They can afford to do it. They're not spending above their means. Then you have kind of the wanksters. You have the pretends, the companies that are flimsily participating in the AI boom because they know that money's falling out of the sky. So when money's falling out of the sky, they know that their fish are all in the water. The fish, meaning hopefully not you, but a lot of investors who will just buy into anything. They can throw anything out there. They can instantly create a billion, 10 billion, $5 billion worth of personal wealth just by throwing something out there, knowing that people will buy just anything that you deliver. So these are the companies that people are questioning. At the top of the list might be Oracle. Oracle went out and borrowed a bunch of money so they could pretend to be a hyperscaler and pretend to be on the cutting edge of AI. If you remember, when Oracle They made a big announcement. Their stock price shot way up. Larry Ellison, who's a good friend of Donald Trump's, instantly was $100 billion richer. I mean, imagine one decision making you $100 billion richer in a day. $100 billion. It would take us 1,000 lifetimes to make $100 billion. He made that much money in a day. Well, as soon as that happened, a lot of the experts said, "No, that's not real. That's not real." And they just didn't believe it, and I didn't believe it. And then on top of that, they were taking on massive amounts of debt to make these AI investments, which says that you can't really afford it. You're borrowing money, so you're saddling your company with all this debt so that you don't left behind in the AI revolution. So you're not Microsoft. You're pretending, right? So you Microsoft ain't taking on a bunch of debt so they can make these investments, but you are. So you're pulling out the credit card to pay for something, whereas your friend actually has the money in their bank account. So long story short, when Oracle first made that announcement, if you remember, I said, Oracle, I'm going to actually buy a bunch of puts on Oracle because I think the stock is overvalued. And that was just me kind of having fun, making like a short-term trade. And it was really profitable. The only mistake I made was that I didn't hold my puts longer because the stock dropped even further than I thought it would. But I just took my profits and left. But Oracle's not real. According to many experts, Sam Altman and OpenAI, the people are questioning them. They're saying, wait a minute, okay, so you're making all these weird, incestuous deals with all these companies, and like where NVIDIA takes an ownership stake of OpenAI, they give them a bunch of money, and then OpenAI is required to take that money and use that to buy NVIDIA chips. And people are like, so OpenAI doesn't have the money. You gave them the money. So imagine that. Imagine you're selling birthday cakes and somebody says, I'd like your cake, but I can't afford $10 for a cake. So you loan them $10 and they take the $10 and use it to buy your cake. That's good. That people kind of look at that a little bit weird, like, okay, and so your friend says, hey, I can afford cake. I buy cakes all the time. You can't really afford cake because they had to give you the money to buy cake from them. And so you really didn't sell a cake and you really didn't buy a cake. Y'all just decided to sort of play with each other's bank accounts a little bit and whatever, and tickle each other and make something happen that really didn't happen. So people are questioning OpenAI for these weird financial relationships. They're also wondering how a company that made $13 billion that's going to lose $80 billion this year, $79 billion, they're going to have losses of approximately $79 billion this year. How is that company going to really fulfill $1.4 trillion worth of financial commitments that are on the books that are being used to value other companies? So other companies are saying, "Hey, OpenAI is going to give us 200 billion," but then people are like, "Well, wait, OpenAI does not have 200 billion. How is this going to work?" So what they really believe, which is to some extent true, is that there's this massive, overwhelming demand for AI, a demand for compute, a demand for the chips. All these things are true, but how true is it, and are these companies appropriately valued? So a lot of the OpenAI, Oracle, CoreWeave, these are companies that are just getting slammed because they're like, you're not real, you're pretending. Whereas Microsoft, Amazon, Google, very solid. If you want, and in fact, that could be like the first. It's not a recommendation. I don't give investing advice ever. But if you want to know where I've been putting Mrs. Alicia's money and my money, it's Microsoft, Amazon, Google. These are companies that are not going to go away anytime soon. They're going to be fine. Okay. And right now, that's what you're having in this sector rotation is what they call a flight to quality. People are like, okay, we've lived on the edge. We had some fun. It was real, but let me get the hell up out of here before before the cops get here, right? And if you notice some of the stocks that we've been messing around with, if you remember, we were talking about Oklo when it was $8 or $9. It went up as high as 170. And if you remember what I kept saying to you was I said, I don't know if how long this is gonna last. I'm gonna enjoy it. I made tens of thousands of dollars from that stock. But if you remember, if you know options, what was I doing? We were selling deep. Not we, I was, and I was just telling you, I was selling these deep out of the money call options because I said, I believe, or I'm shocked that Oklo made it to $120, but I'm stunned that you will be willing to buy a call option that only can be exercised if it hits $200 a share. I don't think it's going to hit $200 because this company ain't made no money, right? So now you've seen Oklo. Oklo's getting slammed. Remember, I was telling you, Oklo is one of those companies that's going to get brought down to earth. It doesn't mean they're not good. It doesn't mean that they won't eventually do well. It just means that the market's having what you call a correction. What some people call a crash is really a correction. A correction just says, okay, we got a little crazy. All right, okay, okay. We thought there was a $200 stop, but really it's a nice solid $110 company. So what you'll find in the middle of all the trash is you might find some companies that are really, really, really good bargains. The hard part is that if you're over leveraged, this is where my good buddy 19 Keys, he's a great smart guy. I had to correct him a little bit. I didn't correct him. It was just like I was contributing to the discussion. I wasn't correct. I like the guy. It was more like he was talking about debt, and he was saying that that you're a fool if you don't take on more debt so you can expand your leverage and make more money. And there was another guy he was debating with on a panel that I was on where the guy was saying, no, I don't like to take debt. I don't want any debt, right? Because he was more Southern, more conservative. He had a family and he was a little older. And what I saw was not so much anybody being right or wrong. I saw a difference in preferences. 19 Keys is about maybe in his 30s, I think. This guy looked like he was in his 40s. I don't know if I don't think 19 Keys is married. This guy was married. So a married man in his 40s or 50s is going to invest differently from a young guy who is 31 years old with no wife and kids. So what I saw was a difference in perspective. Not that anybody's right or wrong. So you got to figure out what kind of investor you are, right? And how you want to fit into that. But anyway, one of the things that I did mention is I said the thing about debt is that debt it looks real sexy when everything's good. Debt is an accelerator of the obvious outcome. Debt will accelerate your reality. It's not going to necessarily create a good reality or a bad reality. So it's like a car. If you're in a car and you're driving 100 miles an hour, then what you're doing is you're accelerating your final outcome. So either A, you will get there much faster than people who are driving 50 miles an hour on the freeway, or B, you will crash. And when you crash, you because your velocity is so high, you're probably going to decapitate yourself and like incinerate in the fire that's going to occur when your car explodes because you were driving so damn fast, right? So ultimately, debt does that. Debt accelerates your financial outcome. So if you've been heavily committed to margin and leverage and borrowing and everything else, you're probably dealing with some margin calls. Those margin calls can be brutal. And what happens is that in a margin call, it's this big economic explosion. And when you are in the middle of an explosion and everything's on fire, your energy can't you don't have a lot of ability to take advantage of the opportunity that's in front of you. You are putting out fires. You're too busy trying to maintain your portfolio, selling assets and finding cash to keep everything stable. Whereas somebody who's been sitting on the side, like a Warren Buffett style person who's very conservative, who missed out on the party, who looked like a sucker because he wasn't taking on a bunch of debt. Oh, he's sitting on this much cash. So he's like, so that stock that you owned that was worth $100, oh, now you're in a fire sale. You're forced to sell because now time is your enemy. You have 2 days to get rid of this asset. I'll take it off your hands for $50. I'll take it off your hands for $50. So ultimately, you got to understand with investing, sometimes the young bull wins that's going full speed ahead, but then sometimes the slow, like the patient investor wins. There's actually a book I think called The Patient Investor. The patient investor just sits back on their assets and keeps things stable. They miss out on the big runs sometimes, but they're ready. So when something like this happens, when the whole world's burning down, they get to walk through and pick through the rubble because everything is on a fire sale. Does that make sense? Let me know if that makes sense. Give me a guess if you're following that analogy, okay? So if you are a conservative investor, this is your time to shine. If you are a person that is more likely to invest in low risk assets, then this is Christmas. Happy Christmas, happy Hanukkah, hallelujah, praise the Lord, as Medea might say, because you can go right up in there and there are stocks you can buy right now that would have cost you $120 last week that are now going to cost you $90 right now. And if you are a long-term investor, then you can buy those assets at a lower cost and hold them until they recover. Perhaps maybe they will, maybe they won't. A lot of them will. Solid companies. Right now, what a lot of experts are doing is they're not aiming for these companies that are speculative. Like for example, quantum computing companies are very speculative because they're not even making money yet. The companies that people are aiming for in the flight to quality are companies that have solid earnings, solid cash flow, growing dividends. So, what's some examples of companies like that that are really popular right now that are not being hit in this storm? Coca-Cola. Coca-Cola, they for some reason people always buy Coke, even though you see those videos where people where they take Coke and it like takes the rust off of the can, like like or something. I forgot what like it's so corrosive and it probably kills you. But for whatever reason, people don't stop buying Coca-Cola even in recessions. So I bet if you go look at Coca-Cola stock, you'll see that it hasn't been hit like the other stocks. Johnson and Johnson, the healthcare recession or no recession, people are always going to get sick, and they pay a consistent dividend. And the other big thing too is that in times of volatility, when everything is inconsistent, that doesn't mean you should be inconsistent, right? You being volatile will only add volatility to the volatility, right? Like if I'm in the car with my teenage daughter and she's having a crazy day and she's like going berserk, and let's say that hormones and stuff change when you're that age, and let's say she's just having a rough day and screaming and it's the end of the world and oh my God, you hate me, this right, teenage girl stuff, right? Does it really help if I say, well, since you're acting crazy and volatile and emotional, I'm gonna be crazy, volatile, and emotional? Is that gonna make things better if I say, well, she's like, you, and I'm like, chill, you don't love me, right? Like, is that really going to make things better? No, it's not. It's not. It's not going to help, right? So the best way I can deal with her volatility is to come in with some consistency, right? So because that at least can help to kind of manage an otherwise chaotic situation. So the stock market is being chaotic. The stock market is being volatile. Risk is very, very high. So what you want to do is you want to find whatever mechanism you have, whatever way you woosah your way through stressful situations, you got to stick to the plan. Remaining consistent is critical at a time like this. Times like this are when real investors are made. Because anybody can sit back and just collect money. That's easy. You don't need a master's degree to collect money. Anybody can do that. What's difficult is knowing how to remain consistent through darker times so that you can prepare to collect your money later on. Right? So I would find a way to calm yourself down. A lot of panic selling historically is shown to be a very bad financial move. And really, if you do have that money sitting to the side and you've been waiting to activate it, then right now it's a tremendously good opportunity to jump in and grab some quality companies at a good price. But when you do it, I'd be really careful about some of the more speculative companies. Like as much as I love Oklo and Bloom Energy, I see you mentioned Bloom Energy, Candace, you know, some of these stocks are kind of memeish. I don't know if Oklo is going to recover. It may go down to $20 and stay there. Remember when we found Oklo, it was $8 and something. And the only thing the big thing that makes me feel okay about Oklo is that whenever that stock shot up, the first thing I did was I said, I'm going to sell an out of the money call option, a deep out of the money call option, because I don't believe it's going to keep going up. So let me get it while the getting's good, instead of holding on to this asset. All right. So a couple more things that are causing the market to make its move. And by the way, those who do stock options with us, we're gonna meet tonight. So if you want to join us in our options income class, just go to drboyceprime.com. That's drboyceprime.com. Believe it or not, there's a lot of great opportunities there. I know that a big chunk of your portfolio has probably been hit pretty hard, but there are opportunities always everywhere. And these are the times where I love teaching the most because this is where fundamentals start taking over. People that do the math, that really calculate what these stocks are worth, they were very frustrated for a long time because the stock market was living in la la land. They would have some company that wasn't making any money, that wasn't that great, that would be worth insane amounts of money just because people on Reddit were willing to go overpay for it. Well, now a lot of those people are taking a bath. They're getting hammered today. And so this is actually a good, and this is what investing is supposed to honestly look like. So moving on, a couple more things that are making the market act a little weird is the Fed. The Fed is like they have something they call the Fed put, where basically the Fed saves the economy. You have a pretty managed economy. When the Fed decides to lower interest rates, it tends to boost the market. And so what happened was the Fed signaled that because the inflation rate is not under control, they may not actually do the rate cut that was expected in December. That was a surprise to me. I was very surprised that they said that. because the economy is showing tremendous amounts of weakness. There's a lot of pockets where consumers are just not spending like they were before. We could be heading into some dark times in terms of recession and all these things, but this is natural. This is what they call the economic cycle. This happens. And so basically, when the Fed said, "Hey, that's what did it." And if you remember, if you recall, one thing I mentioned to you all when we were doing a stock market class on Tuesday, I said, "Yeah, I think when the government shutdown ends, the market's going to get a little boost from that." I think that would have happened if it wasn't for the Fed. What happened was the same time the Fed popped in, the Fed's like, "Oh yeah, that rate cut we were gonna do, we're not gonna, we're thinking we won't do it." And the market just got depressed. The market was like, "Oh God," and everything went south. So they kind of rained on the parade a little bit. It's like, man, damn, like I thought you guys were gonna do the rate cut. But here's the beautiful part though. You've got this like ace in the hole, or you can call him an ass in the hole or something. I don't know. Donald Trump. This guy, he's either your ace in the hole or he's your ass in the hole if you think he's an asshole. He's a guy that is also losing money like you. Some of you may have lost $5,000. He probably lost $2 billion. He's deep in crypto. Crypto's getting hammered right now. You see Bitcoin's below 100,000. I just personally think that this guy this narcissist who's got more power than almost any person on the entire planet. This is the crazy. This is what makes it hard to deal with like a Trump or a Kanye, because I told you about all the time I spent on the phone with Kanye West, is that it's really hard for me to convince Kanye that his arrogance is a bad thing because the world just confirms that it's a winning strategy for him. But I'm like, but it makes you a terrible human being. But I mean, I guess if you're okay with that, then yeah, it did make you a lot of money. And so with Trump, the world has kind of confirmed his narcissism, right? Again, I don't care if you voted for him or didn't vote for him. He shows some traits. My wife's a therapist; she's always diagnosing. But long story short, I wouldn't be. I'm just really expecting at some point he's going to come in and do something. He's going to say something that's going to end up boost in the market. I don't know what it's going to be. Maybe it's going to be some announcement. He's going to cut a tariff. He's going to, whatever. I think that when him and his friends are getting, sent to the cleaners financially, I feel like he's going to step in and do something. And remember, he's always trying to put pressure on the Fed. Highly inappropriate behavior. The president is not supposed to put pressure on the Fed. For those of you that love Barack Obama, this is what a Barack Obama would never do. He would never be, calling the Fed chair an idiot and all this other silly stuff. But what's happening is I think in May Trump is going to replace the Fed chair, and when he replaces the Fed chair, that Fed chair is going to push interest rates down. And the minute he announces, or the minute they announce the replacement, that will probably be a catalyst for the market to go up. So if you ask me, is the market rigged? It absolutely is rigged, and I just want it to be rigged in your favor. And I'm just telling you what I see. I'm not telling you what my opinion is on it. All right. So what else? The only opinion I will share is that I don't think it's appropriate. I think that there's more civil ways to run economic policy, and I think that there's a long-term price America will pay. But in the short term, I just want to see some more money in your bank account because I care about you and your family. I don't care about these other people. Right. So what else? Another reason the market took a dip is because of the weak economy. The economy is weakening. We mentioned that a second ago. And then also there's like some what they call profit taking. So people have been making so much money. The last few months, it's just been like Christmas for everybody. And so what happens is eventually, especially when there's a little dip, people say, "Oh, let me go ahead and sell so I can get out before this happens." Now, here's the thing: if you understand other tools like selling stock options or buying put options and stuff like that, then you can stay invested and still be you can stay protected but stay invested. A lot of people think the only way to protect yourself is to take all your money off the table. No, what you do is you shave. You just kind of shave it down. So you have a stock, you put 5,000 into it, you lucked out, it went up to $8,000. Maybe you take the $3,000 out and keep the original five in there. That way you're still there in case there's more, but you have sort of locked in some of those gains, that you had and while the getting was good. Or another thing that we talk about a lot in terms of options is selling a deep out of the money call options. When you do that, then that allows you to get some profits from the speculation that's behind the stock. When everybody's speculative and everybody expects the stock to keep going up, there are some people who don't know investing the way you do. And I say the way you do because you probably know more. If you've come to class 10 times, you know more than probably 80, 90% of the population. So most people don't know the things that you know about what the market does. They become what's called momentum traders, or they follow the herd. Remember, we do a lot of the research we did with one of my dissertation committee members. His name was David Hirschleifer, one of the nicest people in the world. Yeah, you always remember the white men who were nice to you, because unfortunately, if you're a white man, just y'all kind of mean sometimes. But he was one of the nicest people ever, and I just love this man. And he used to study. He convinced me in his research that people just are sheep, that people just follow the crowd for whatever reason. Even when you tell them, like, don't follow the crowd is wrong. People will just follow the crowd, and there's various reasons. There's safety in the crowd. I feel like I want to fit in, right? And so I realized, I said, the best way for me to be successful is to give up my need to fit in. Right. And if you can let go of your need to fit in, let go of your need to be liked by everybody or to be accepted by idiots, then you can go and you can be free. You get freedom and you can have more success because you're the person that trusts yourself enough. You inform yourself and then you trust your opinion and your instinct. And you say, everybody says go right, but I think I need to go left. I'm gonna go left and I'm gonna be okay with that. That's a superpower that will unlock possibilities for you. Because if you look in America right now, and generally speaking, the average American that gets up and goes to work every day, goes to work, gets up, goes to work, comes home, goes to bed, get up, go to work, come home, go to bed, get up, go to work, come home, go to bed. That person is not really doing that great. They're not, if you ask them, like, how are things going? Is your boss paying you enough money? Do you feel financially secure? Are you happy? A lot of those people are not doing well. So the people that are able to do well are the ones who are able to unlock and break out of the matrix. And so for those of you who've been able to do that, I congratulate you for that because happiness is out there for you, but you got to know how to go get it. You're guaranteed those three inalienable rights: life, liberty, and the pursuit of happiness. It doesn't give you life, liberty, and happiness. It gives you the pursuit of happiness, which means that happiness is not going to land in your lap. You got to go find it. And I talk to my daughter all the time about happiness. I don't even talk about like careers and then what job you want. I'm like, no, let's figure out happiness. What does that look like? Do you know what makes you happy? And once you know what makes you happy, are you free to pursue it? Do you have the courage to pursue it? A lot of people don't know what makes them happy. They don't have the freedom to pursue it, and they don't have the courage to pursue it. So if you can have the knowledge, the freedom, and the courage, then you will win in life. And that's the goal. The money is just a tool to get there, but that's the goal, right? So anyway, long story short, getting back to investing, let's talk about style. Y'all don't come here to hear me give a happiness lecture, but I think happiness is important. But then again, you're talking to somebody who I had some depression in high school, so I became obsessed with understanding happiness and everything else. So I'm really into that. I'm obsessed with time and happiness. I think those are the two things that have always been really interesting to me, and I because I think that those are things that really can help you to get what you want out of life. Okay, all right. So anyway, moving on. Last couple things. Some of you are asking for stocks that I like. I think right now with this market kind of being a little bit flimsy, I mentioned earlier Microsoft. I mentioned Google. I bought some more shares of Amazon. I'll probably buy some more today. Johnson and Johnson and Coca-Cola. Those stocks will put you to sleep, but they're not going to steal your money. So, I hate Johnson and Johnson a little bit because it's like you look at the chart, there's nothing exciting there. But that's the thing. Sometimes when everything's chaotic, sometimes you don't want excitement. Sometimes you want a nice, boring portfolio. So those are some stocks maybe worth looking at. Those are what you call low beta stocks. And so what's happened, low beta means if you have stocks that are if you have stocks that really overreact to whatever the market's doing, like kind of drama queen stocks, those are high beta stocks. Stocks that are just chill and cool all the time, that don't really like move that much, those are low beta. So right now there's a rotation. They call it a market rotation from high beta stocks to low beta stocks. And this is so Coca-Cola, Johnson Johnson, Microsoft. I mentioned those three. Those might be things worth looking at. All right. And these are stocks also that are like generational wealth transfer stocks, in my opinion. Like you just keep dollar costs. Oh, there's another piece I want to mention too. The the big thing about a crash is that to keep in mind is dollar cost averaging. Dollar cost averaging again goes back to when I was telling you before. When the market's acting crazy, you don't have to be crazy with it. You can be consistent when the market's crazy, and consistency means something like dollar cost averaging, where if you say, "Look, I'm gonna buy $100 worth of this stock every month," you just keep doing it consistently, no matter what. $1,000 worth, $100 a week, whatever you can afford, remaining consistent over and over and over again is what allows you to sort of weather some of these storms. That was how I was able to turn that cannabis investment into a profitable one. Was I just said I just stuck to my original thesis. I said this is why I want to invest in cannabis because I think it's going to do this, this, and this, and they're going to legalize it and all that. And so even as the price kept dropping, I just kept buying more and more. So what happens is every time you're buying and the price is dropping, you're lowering your average costs of purchase. And when your average cost of purchase gets lower and lower and lower, it only takes a little bit of a pop in the stock for suddenly for that investment to go from negative to positive. So dollar cost averaging is really essential when the prices drop. So the key idea I would say for sure is to try not to allow market conditions to shift your investing strategy. That would be big. Pick your strategy, stay with it, be consistent, because if you don't, you're doing something called market timing. Market timing is where you try to make moves and you try to invest a lot when the market's doing well and you back up when the market is doing bad. And that research, the research shows that that does not work. Time in the market doesn't work. The best experts on earth can't do it. Warren Buffett can't do it. Warren Buffett is the guy who will say just dollar cost average into some sort of index fund and just do that for the next 30 years and then you're going to be rich. That's the kind of stuff that he talks about. He learned from a book called I think it was called Value Investing, written in 1932 by Graham and Dodd. And Graham and Dodd, their book was written during the Great Depression, so they had a real conservative kind of perspective. And you can't laugh at conservative people because look at how much money Buffett has. My grandma was conservative, and let me tell you, my grandma had what raised four kids by herself without any help from anybody. And my grandma she never had a financial problem. She never made more than $22,000 a year. This lady never had credit cards all paid off, house paid off, car paid off, credit score whatever, 800, 850. Grandma was good, right? So don't laugh at those people that have a conservative disposition because a lot of you got grandmas like that. Why? Well, because they knew that they didn't have much of a margin of error. They couldn't be out here gunslinging and living the wild life and thinking that it's going to be okay because they knew nobody was going to save them, right? So ultimately, I would encourage you to learn from your grandma, they and your granddaddy too. They can teach you a lot about what it means to be successful, consistency. All right. So a couple more things really quick. This weekend, well. By the way, if you're interested, I did a training called Storm Proof Investing. That you can share with your family. Feel free to go to stormproofinvesting.com. Stormproofinvesting.com. You can take a look at that, and that's all about investing in chaotic and volatile times. So I go through different strategies on how to protect the portfolio and just sort of what that looks like. So stormproofinvesting.com. Also, this weekend we're doing the B1 options investing weekend, and that's going to be with Errol Seemengall. Errol might even be here today. Errol's a great dude. He comes to all the events. He'll be at the All Black National Convention, which is going to be at the Hyatt on the Hudson, right outside of New York City. I said Brooklyn before, but I found out Brooklyn is just expensive. So we decided to go to the Hyatt on the Hudson, which is a beautiful venue, and you get to look out the window and look at the water all day long, and it's just it's a gorgeous place. So very bougie, very elite, very elite, but but not expensive elite, right? So bougie on a budget. So if you want to join us at the convention, you can go to allblacknationalconvention.com. That's allblacknationalconvention.com. It's not just a great place to connect and fellowship and learn and grow. It's also a great place if you have a business and you want to be a vendor. We have vendor spots, and also there are sponsorships you can get if you want to promote your company as well. And then of course it's just a great place to have a great experience as well. All right, so anyway, I'm out of here, guys. I hope you have a great day. Thank you so much for listening. And if you're not on the text list for this class, pull out your phone, text the word morning to the number 87948. I'll invite you to the Zoom so you can come into the Zoom with everybody else. Text the word morning to the number 87948. So God bless you guys. Have a great day, and I hope that this was helpful to you. And those of you that are doing stock options, we're going to meet tonight, and we're going to specifically go through everything in terms of options income and where the money is and all that. So don't freak out. I know we've been talking about this day, and this day is here. So now let's go in and have some fun with it. All right. So if you want to join us for stock options, just go to drboyceprime.com. drboyceprime.com. That's the URL above my head. I'll see you guys later. Have a great day. Love you. Peace.